Redefine Properties has a portfolio of retail, commercial and industrial property assets and major stakes in Redefine International and Fountainhead.
Right, so this is Mark Wayner. I think everyone is familiar with his role in building this particular player. Very heavily geared, very exciting, always doing something creative, always reaching for something new, buying something out, scrapping with somebody in the marketplace, bringing new and interesting assets into the portfolio.
Market cap here, $47 billion rand, sorry, I've just come back from the States. 47 billion rand and trades on a yield. Is this a historic yield of 6.1?
Okay, even cheaper looking forward. It's about a 7.2% forward yield, so it's cheaper than growth points. But here you have your kicker, your potential kicker, is that 47 billion, it's on the doorstep of the top 40. Should they increase their market cap further and you see it into the top 40, there's a huge marginal buyer that'll come through, and there, in lies your kicker.
That's interesting.
So Evan's point here is that if it's in the index, then it does, as he was saying earlier, tend to get owned by generalist investors who need to track the market and who are judged relative to that performance. But look, I think Mark Wayner has always done that in the portfolio. As I indicated earlier, they had the scrap for Fountainhead. That is now additional quality assets, and I think that generally increased the quality of the retail assets in the portfolio. Because I always used to look at the portfolio and think, that's interesting. They're like most blue chip property in the retail side is like the Golden Walk Mall in Germiston, and I thought I wouldn't go there, but it's now got a bunch of other stuff like in the Cape Town environment of considerable quality.
Where this one relative to growth point in the rest of the market, are we looking at a similar story?
You know what, everyone's going to be kind of painted with the same brush should interest rates shift, but it is cheaper than growth point at the moment. Growth prospects are similar, but you do, as I said, have that technical factor should it enter the top 40. Just to take a step back, I would love Golden Walk compared to some of the northern suburb centres because it does the numbers.
Does the numbers. Exactly. Hey, but now one other question I want to ask about the international thing. We know that Redefine International is a different company, separately listed, doing its own thing in Europe. But what is the contribution to Redefine South Africa's NAV from that stake that it has now still in?
I think more importantly is the contribution to earnings. And remember, unlike Growth Point, it just has an offshore stake in Growth Point Australia. Redefine has the stake in Redefine International. They have a direct exposure to Cromwell, an Australian company, and they have several direct assets, North Point in northern Sydney, as well as a big German portfolio that they recently acquired.
Indeed.
But funny enough, their contribution to earnings is very similar to Growth Point, around about 17%.
Excellent. That's the kind of detail we were looking for.
Are you done with the line of questioning on Redefine? Have you got a good assessment of the stock?
I think so. I'm very positive about
Hot
the sector. I like Mark Wayner. I think he remains at the helm. He's got his hands on it. And I think you can always be surprised. And then just to end with echoing Evan's point, which is inclusion in the Aussie 40 still is something that gives companies in general a little bit of a lift.
What we're looking for. Hot or not?
I'm hot, but before I've finished, we always speak Mark Wayner. He's now the executive chairman. The CEO, a guy by the name of Andrew Koenig, is exceptional in his own right. So they're building a lot of depth in that company. So I'm very hot on this at the moment.
Excellent. Good.
Hot on Redefine.